Why don't we get started? Good afternoon, everybody. Thank you so much for joining us. My name is Subash Alias. I'm with Missouri Partnership. We are honored to have Governor Mike Parson with us, the Director of the Missouri Department of Revenue, Wayne Wallingford, the Joel Allison, the Division Director of Taxation, also at the Department of Revenue, and Jared Walczak, the Vice President of State Projects at the Tax Foundation. I will kind of get us kicked off here, and then we will get into some remarks. And then if you've got questions, you can put them in the chat. It would be helpful if you maybe say who you want to direct the question to, and then that will help as we go through this. And then I think we'll close by 2:30 Central, so we should be good. So first, again, I'm Subash Alias, the CEO of Missouri Partnership. For those of you that are not familiar with us, we are a public-private nonprofit economic development group. Our public sector partner is the Missouri Department of Economic Development, which reports directly to the governor. Our private sector partner is the Hawthorne Foundation. We have offices in St. Louis and Kansas City. And we really do one thing, and that's business attraction, marketing and business attraction, or business recruitment in our industry. So what we want to do today is share with you this exciting news about the Location Matters study prepared by the Tax Foundation, a highly reputable organization, specifically Missouri's Tax Competitiveness Report. So the way that this worked is last year, the Tax Foundation modeled a number of different sort of scenario companies under two different scenarios with new companies and mature companies, and to see what their tax obligation would be should they invest in a facility in Missouri as well as 49 other states. And so we have the report. There's some great information in there. Really impressive and really pleased with everything. So what I'm going to do is turn it over to Governor Parson. Of course, Governor Parson is he's a key ally of ours, very much a pro-economic development governor. We've worked with Governor Parson on countless business attraction projects throughout the state in our urban areas, rural areas, and sort of everywhere in between. So I will now turn it over to the 57th governor of the great state of Missouri, Governor Mike Parson.
Thank you, Subash, and great to be with everybody this afternoon. A lot of good things happen in our state, and I think really part of the reason we've been so successful in this state is because we've been able to do multiple things at the same time and really focus in on our tax structure in the state and how that's been complementary to workforce development, to infrastructure in our state. And I think right now Missouri is ranked about 10th in the United States for tax rates for new businesses. We've actually lowered the tax rate in Missouri the last 3 years, twice since I've been governor. And when you start putting a combination of the taxes in there for businesses, I mean, we all know when we go recruit businesses here in the United States or expanding our own businesses, or frankly, globally, businesses are going to look at that structure to see what it's like to operate business here. I think it's one of the reasons we reach out so much to our partnership with Missouri Partnership and the Hawthorne Foundation to be able to set the groundwork to get a business to even look at our state. And I think one of the reasons the tax structure is so important is where Missouri ranks now, we're 10th in the United States for site selections. For most of you are familiar with that. That's where people are taking a look at your state before they are 40 other states and trying to figure out, okay, can we expand a business? Can we move our business to be able to come here? And the other things we all know is if you're going to develop a workforce, what are you going to do in that workforce for that business to come? But then the people that live here and get those jobs, what is the tax rate they're going to have to live? And what does that look like for them to bring their families into this state? Especially in a different area for unknown businesses that come here for the first time. So I think all of those things are so important. I think the other thing that gets overlooked here in Missouri is really where we stand in the United States in our bonding, on our AAA bonding. Most states can't say that. I think the last I knew, we were 6 or 7 states that have a AAA bonding rating. Well, that's huge for the foundation of our state and the balance of our state and our budget. And we've been able to do that for years now. So in the infrastructure arena where we're bonding, whatever that may be, all of a sudden you're getting the lowest rate you could possibly get to invest more money into your state and more money into your businesses. All of those things matter when you're trying to bring in new businesses and you're trying to bring people into your state. and how that really ends up at the end of the day. And the philosophy that we always believe in, I think for most of us, a lot of government, how we believe it should operate, the more money people can put in their pocket, the more money they're going to invest, which means more jobs, more businesses, and our economy is going to be at a much faster rate than a lot of others. I think dealing with COVID-19 for the last 2 years and being able to run the economy at the same time, the states that got that figured out early on are at a much more of an advantage over how they're going to use the resources that we've been given to us now from the federal government to the state. And if you look at Missouri, for example, we don't have to use any of the federal money to backfill any budget shortfalls. Matter of fact, we're just the opposite. We actually increased revenues over the last 2 years because we kept people working. We brought businesses coming in to our state. And that's what really makes the difference. But again, when you go back to the tax structure of how we're doing business, and you have to have a combination of all the above, but if you don't have that structure in place, I guarantee you that people are going to take a second look at somebody else before they're going to look at Missouri. So I think there's a lot of things that we've done that we're very pleased with. And I think from 3 years ago, when I first started, when we talked about workforce development, we talked about infrastructure. So it's one thing to talk about those, for Subash to go out there and his team to go out there and recruit these businesses, but you got to be able to go out there and sell something to these businesses, because everybody else is going to tell you they're doing a great job too, and our states are doing a great job. It's very competitive. But I just want to give you just a little bit of statistical information, and then I'll kind of finish up here. But why 3 years ago, workforce development, infrastructure, tax rates make a difference. And I want to tell you what it's done for our state. And we've never seen numbers like this before. And I'm just going to give you a few top 10 rankings. But right now, Missouri is number one in the United States for on-the-job training. Every business is going to look to see what you're doing there. We're third in the United States for apprenticeships. Third in the United States for our business tax index, far outranking all of our neighboring states around us. We're fourth in the United States for new manufacturing facilities. We're fifth in the United States for low cost of doing business. Seventh in the United States for technology growth. Top 10 for site selection. Top 10 for automobile and aerospace industry. When you look at the businesses that all those arenas touch, it's almost everywhere, every place, everywhere touches what we're trying to do in this state. And plus, for Missouri, we're in the middle of the United States, and a business owner myself, what is the three things we're always going to tell you about running a business? It's called location, location, location. There's not a better place in the United States to start a business, and you can go anywhere in the United States from the middle here. So there's lots of advantage we have, but it really comes down to some of the things we did early on the tax codes in this state and how we're utilizing the workforce development infrastructure pieces. So things are going well for us here. With that kind of foundation, we're going to continue to build on it. So let me turn it back over to you, Subash. Thank you.
Governor, thank you. A lot of great rankings in there that you mentioned, and we're talking about some more rankings this afternoon. So really excited to share that with you. The Director of Revenue, Director Wallingford, wanted to give you an opportunity to share a few words before we turn over to Jared. Director?
Yes, it's an honor to be here. Actually, today marks my second-month anniversary as being the Director of Revenue. And I bring with me almost 30 years of experience working for 2 Fortune 500 companies. And also I've served in the House and the Senate and was the chairman of Ways and Means in both the House and the Senate. So working for corporations, I'm very aware that the amount of investment depends on the attractiveness of investment in a state. So cutting the corporate tax rate is a good place to reform our climate so we can get businesses to invest here. So lower tax rates are associated with more rapid growth, while higher tax rates actually depress income and output. And I think the Missouri House and Senate's done a good job in the past, and I know we're not going to rest where we are. We're working on improving it even more.
Thank you, Director. Happy anniversary, by the way. That's great.
Thank you.
Great news. Okay, so we'll turn it over to Jared Walczak, the VP of State Projects with the Tax Foundation. We had the privilege of working with Jared on this assignment. I guess it's been about a little over a year now. So, but turn over to you, Jared. Thank you.
Subash, thank you. And thank you, Governor, and also Director Wallingford. Really appreciate your remarks. And particularly, Governor Parson talked a lot about tax structure. And that is so important. That's a major element of what we are looking at in this report and what I want to talk about here. Rates tell you a lot. Rates are really important, but the structure is deeply important to the investment that businesses make, the decision making that they engage in, because tax codes can ossify around the particular vision of policymakers, and sometimes that can get very out of date. You want a neutral tax code, a pro-growth tax code, one that gets out of the way of economic decision making. It raises the requisite revenue. But it's not in the business of deciding the wrong things, essentially, and getting in the way of businesses. And one thing you see in a lot of states, and you really don't see in Missouri, and I think this is very good, is these huge disparities between different industries. One of the things we look at in our Location Matters report, and I'll talk a little more about this, is just the effective rates on different industries. And Missouri is pretty good for most industries. Whereas some states are uniquely bad for some while providing certain incentives for others. And of course, Missouri has been working on reducing tax rates and improving its overall competitiveness for a number of years now, particularly under Governor Parson. And the state offers now, in our study, the 10th lowest effective rates for new businesses, those just starting out eligible for incentives, according to our analysis, and also a very competitive rate for mature businesses. So those long-term decisions, because the companies that especially economic development officers want to attract, you want them here not just for the first few years, you want them here for the long haul. Missouri has sort of gone its own way on some tax issues. It was the last state to adopt post-Wayfair sales tax nexus, but when it did, it offered some relief along with it. I think that was great. One of a small number of states still having federal deductibility on the books, though there's been some efforts to reduce that. But what's really notable, what really stands out, and I think is apparent to people across the country, is that Missouri's made a real commitment to get rates down. You go all the way back to 2014, lawmakers adopted SB 509 with some triggered rate reductions. That only triggered once. You get it to 5.9. Governor Parson signed legislation in 2018, bringing that rate down for the individual income tax to 5.4% top rate, with the potential for it to continue to go down. Fast forward to 2021, you get some further increments added to that, meaning the rate can go down as low as, I believe, 4.8%. And now we're at a position where, because revenues are really solid, a lot of states are seeing revenue growth right now, but the forecast looks good in Missouri. There's an opportunity for further relief. And I know there's several bills pending that would allow further rate reductions, further reforms, individual and corporate reforms, to keep rates really competitive. But already we're looking at a 5.4% rate in the individual income tax. I think that could well go lower. The corporate income tax currently stands at 4%. That is tied for the second lowest in the country. It's after the 2.5% that you have in North Carolina, but tied with Oklahoma for the second lowest in the country. And this shows, we've seen significant improvements in the state's competitiveness over the last couple of years. And one of the ways that we look at that is through this Location Matters study that tries to bring together the structural elements and the statutory tax rates to look at what the effective tax rates are on the sort of businesses that states are really trying to bring into a state. So working with KPMG, we took 8 model firms, corporate headquarters, a research and development facility, a technology center, a data center that was newly added to this version of the study, a shared services center, a distribution center, and then 2 different types of manufacturers, one that's very capital intensive and one that's very labor intensive. And we ran their taxes twice. We put them in each state, we put them in appropriate cities, and then we ran their tax burden first as a new firm, typically eligible for various incentives, and then as a mature firm, one that's been around for at least 10 years and often doesn't have as many incentives available for it. And we have the numbers available. This is in the report that all of you will have a copy of. You can see the effective rates. You can see the breakdown, which taxes are being paid and which aren't, and what rates for each of these businesses. But what you can see is that Missouri is pretty attractive across the board. Very attractive for data centers, for shared service centers, and for labor-intensive manufacturers, both new and mature. Also very attractive for new technology centers trying to bring in that new investment. And for the rest of them, I would say average or better in most cases. No mature firm is worse than 34th. No new operation is worse than 27th. And the combination is very good. There's a pretty neutral tax code, pretty neutral treatment of a lot of these firms across Missouri. The state ranks 10th overall for new operations and 18th for mature firms. Looking at your border states, two of them, Nebraska and Oklahoma, have more competitive rates for new firms. They have a lot of incentives. And then four have outperformed on mature firms. But what you do better than anyone else is you're just not choosing one. You're not saying we're really good on new, but we're not so we're not so great on mature. You are very solid on both new and mature firms. Oklahoma is, I think, the state that's most competitive with you on that in the region, and that's very new. They just recently adopted some tax reductions that bring them there, and I think we're still waiting to see some of the investment on that, but. Missouri's really taken a lead on a lot of this. And there are some good structural pieces of the tax code that are very helpful for a lot of business investment. Within the corporate income tax, Missouri sources services where the benefits are received. So when you choose as a business to invest in the state, put operations in the state, and you are providing services to clients across the country, Missouri is not including those services in the local sales factor. They are in the other state sales factor. Some states mix this up. I mean, normally when you're apportioning corporate income taxes, sales are apportioned where the sale is destined, it's destination based. But a lot of states use income producing activity or cost of performance as how they determine where a service is sold. So functionally, you would be saying, well, if the service is performed in Missouri, then the sale is in Missouri. And that would mean that you're taxing that activity in a kind of punitive way. A lot of states do that. Missouri gets it right, gets it better, sources services where the benefits are received. That reduces the cost of operating in Missouri. And it also means you're taxing some of the firms outside of the state that are selling into Missouri. You have very competitive income taxes overall, competitive rates on both the corporate, which of course is important to larger businesses, C corporations, and individual income taxes, which are relevant because 96% of Missouri businesses are structured as S corporations, partnerships, LLCs, or sole proprietorships. These are businesses where the income literally flows through to the individual returns of the owners, and therefore the individual income tax is the tax that matters. It's also important, though, because businesses have C-suites, and they have highly paid employees, and they care about the individual income taxes where they end up. We see evidence not only that corporate income taxes drive location decision-making for firms, but individual income taxes do too. And of course, there's also the factor that they change the cost of labor. So lower individual income taxes is more competitive for businesses when they are competing in that marketplace for labor. The state sales tax rate is a little above average, and property taxes can be substantial for some firms. One of the things that contributes to that is what's called split roll taxation. A lot of states have a single assessment ratio or a single rate across all classes of property. Missouri does allow commercial property to be assessed at a higher assessment ratio to pay more per value than residential property or other classes of property. So that is one area where there may be less competitiveness than some of your neighbors and a lot of the peers. But on the flip side, several of your neighbors, 3 of them, Arkansas, Kentucky, and Oklahoma, tax inventory, which isn't that common, but it's common in this region, where businesses that have inventory in stock, whether it's a manufacturer that still has their goods that have not been shipped out yet, or whether it's a retailer that maintains inventory, that is considered tangible property that is subject to the property tax when it's in the state. If you have them in the books, then you are discouraging companies from keeping that inventory in state any longer than they have to, and making sure that it's out of state during relevant assessment periods. Especially in a time where we have some real supply chain crises, we don't want to be contributing to poor decision making about where inventory is located, but also it's just an inequitable and not very sensible tax that discourages certain activity in states. 3 of your neighbors get this wrong. Missouri gets it right. It makes a big difference. The improved tax climate that we've seen over the last couple of years with the reforms that Governor Parson mentioned, it shows up in location matters. It also shows up in our state business tax climate index, which is a measure of tax structure, not tax collections. The state has improved in the last couple of years from 16th to 12th overall, and is third on corporate taxes. And it also shows up, I think, in other indices, as the governor mentioned, CNBC, top states for business rankings, you've improved substantially. I think you're 10th on economy, 5th on cost of doing business. There's room for improvement in the state, as there is in every state, but there's also a lot that has gone right in Missouri. The state's very well positioned geographically, but also I think very well positioned because of tax changes in recent years to capture the investment that increasingly is very mobile. One of the big takeaways since the start of the pandemic is that both businesses and individuals are more mobile than ever before. Many individuals are free, especially white collar employees, are free to live pretty much anywhere with an internet connection. And we are seeing that migration start to take place. States like Missouri that keep taxes low are in a really good place to attract those individuals. But this is also true for businesses, because businesses care about a lot of things when they make location decision making, and taxes are one part of it, certainly not all of it. They care about the quality of life, the cost of living, the cost of doing business, which includes taxes. They care about having an educated workforce. They care about a good education system, good infrastructure, all of these things. But often one of the huge impediments to businesses moving is having that workforce in place. And Missouri, as the governor mentioned, has done a lot on workforce development. The other thing is that in this environment, you don't have to have all of your workforce there when you move. You can move and have remote employees for some positions and attract people over time. This has meant that companies are a lot more mobile right now than they had been in the past, and they're going to be more tax sensitive, especially given how many states are cutting taxes over in last year or so. 16 states cut either individual or corporate income taxes, or both, last year. A bunch of states are lining up to do reforms this year, red and blue states alike. So it's a competitive environment, but Missouri has positioned itself very well to capture the attention of businesses and also individuals in this environment. And the location matter study is one way of quantifying that, one of several, but it's a unique study, and I think a really important study, because it tries to answer some questions that aren't easy to answer. How does the tax code, all of these different pieces, translate into actual liability for different industries? So with that, I think I'll turn it back over to Subash. Happy to take any questions, and also just appreciate everyone getting on the call.
Jared, thank you. So if you have a question, we can put it in chat. But in the meantime, I'll just kind of wrap up some comments, just to say, the governor mentioned two crucial components: workforce and infrastructure. So those are what we call kind of two of the 6 buckets of information that companies will evaluate. The governor also mentioned location, and that's the third. So there are 3 more that we would kind of also say that companies use to evaluate facilities. Soft infrastructure. This is something like the like type companies. Maybe there's a supplier or a vendor in a community and the companies want to be near them. Quality of life, why we love living in Missouri, cultural resources, recreational amenities, sporting teams, things like that. And then the last one's business climate, which is right where this falls into. When companies look at Missouri, the governor mentioned the AAA bond rating. That may not excite your average individual, but when a company is going to put $100 million into the ground, they want to mitigate their risk. And doing so in a state like Missouri with a AAA bond rating helps mitigate that risk. And so, and all the information that has come out from this study is excellent. We're going to take the information and share it with our prospective clients. So with that, I'll see if there are any questions. Jesse, anything come up? If not, I've got one that I think we can throw out there. I'll just ask this. Jared, with this year's proposals focused on individual income tax cuts, do those matter to corporations, and how are they part of the location matters analysis?
That's a great question. And they're not really a major part of the location matters analysis. We are focused on C corporations in the study. So there are some input costs where the individual income tax matters, but it's not a direct tax that is showing up in the study. They do very much matter for businesses, though, in the way that I discussed. One, there's clearly sensitivity by business owners and the management in location decisions. They want competitive individual income tax rates, but also it's a labor cost input. You are changing the cost of labor when you have higher individual income taxes. Businesses are sensitive to that because their employees are sensitive to that, and it changes the cost of labor in the state. So it's really important to do both. In fact, in many ways, individual income taxes really are born in state. Corporate income taxes, for a lot of reasons, tend to get dispersed across states. So the corporate income tax is the direct tax on investment. In many ways, it's a worse, more counterproductive tax in its overall economic impact, but that gets dispersed across a lot of states. It's not always really concentrated fully in one state. Individual income taxes are concentrated in their effect. So I think it's really significant that Missouri is making this commitment. And here's the thing: right now, as of next year, once all of the tax cuts that were adopted last year and thus far this year are in effect next year, the median top rate in the country will be 5%. I think people have this idea that top income tax rates on average are still like 6 or 7%. The median top rate is about to be 5%, and honestly, by the end of this year, if a bunch of states adopt the tax cuts, I think they're going to. It's going to be lower than 5%. Iowa just adopted a path to a 3.9% individual income tax. Indiana might soon get to 3%. To be competitive, you need to be under that. And I think Missouri has made a commitment to continuing to move. I mean, 5.4 now, it's huge progress from 6. And I think continuing to move in a direction that will put it in a very good position.
Okay. Thank you, Jared. I don't believe we have other questions in the chat, and I want to be respectful of everyone's time. We said we would do a stop at 2:30 Central. Any last remarks from anybody that didn't get to share anything that they wanted to before we conclude? I believe we are recording this, and for the members of the media, if you want to reach out to the Tax Foundation, I'm sure we can find a way to connect everybody. If you've got questions, if you want to email them later, we can respond to you via email. And if you have any other questions, feel free to call us at Missouri Partnership.
I'd just like to say that the amount of investment depends upon the attractiveness of investing in Missouri. So we want to make Missouri the state of choice to invest in, and we're going to be doing that by encouraging investing, innovation, and job creation.
Yes, agreed. That's our goal. Okay, well, Governor, Director Jared, thank you so much for joining us today. Really excited about this. There's a lot of information in the report, and we'll be sure to deploy that to our clients.
Subash, thank you very much for having me on today. Appreciate all of you being on and really having this discussion about taxes, because it is what will move the needle in all of our states. But we have to address that all the time. So thanks for having me on today. Appreciate it.
Thank you. Take care.
Thank you.